What is up, everyone? So today I want to show you guys a really interesting tool that I use in the thinkorswim platform. And if you don't know, thinkorswim is TD Ameritrade's trading platform, and it is free to use. I believe you have to have an account with them, but it's free to use after that. In my previous videos, I'm quite bullish on oil and oil stocks as a whole. So what this tool basically allows you to do is go in there and adjust the price of oil up or down, and that will show you basically what the share price would be if oil were to be 70 bucks a barrel today, or if it were to go down to 50 bucks a barrel next year. By adjusting those numbers, it allows you to basically see what effect that would have on the share price, and it also allows you to adjust other things like sales volume. So if they were to produce more oil next year than they did today. Also things like margin, and this isn't specific to oil stocks. That's just an example because I am so bullish on oil. It's interesting to see what effect oil prices would have on the share price of various companies. But you can also do this for Apple. Say next year they're going to sell 10 million phones, and I have no idea if that number is accurate, but you can go in there and adjust that up a million, down a million, to whatever number you want, and you can see what effect that has on the share price. You can also go in there and change the margin and other things like that. But it's just a really cool tool to use. And real quick, I'll demonstrate this real quick on the thinkorswim platform, so we'll just jump into my computer for that. Okay, so we are in the thinkorswim platform, and from here we'll go to trade up at the top, and then you'll go to company profile, and then from here you can type in any company that you want. Not all companies have this feature, so if you go to like a smaller company like Chesapeake, it does have Chesapeake. So let's say we go to an even smaller company, say let's go to CRC, and yeah, so it doesn't have that information, but for most companies it does have this feature. So let's just go to ConocoPhillips, just because that's a pretty basic oil company. I do own this stock. So right now we'll go to crude oil. They do produce some natural gas, but it's not as much, so we'll just go to crude oil. And then, so I already adjusted this number. Let's adjust it back down to what they think it is going to be. And right now they have that line at about, so 2018 they have it at 55, and obviously right now it's at 60 to 65. And then they have upward sloping. 2022 they have it at 70. I think this is quite wrong. If you haven't seen my previous videos, I go over why I think we're going to be in for an oil price spike in the next 2 to 3 years. So if you haven't already watched that, go ahead and go back and watch that. I give some pretty interesting statistics on supply and demand, and how I think that in the next 2 to 3 years supply is not going to be able to keep up with demand. But we'll just adjust this. So let's just keep it right here. And at these oil prices, it has estimated share price at 53.50, and it's trading at 54.50. So pretty accurate right now. Or yeah, actually it's trading at 54. So we'll adjust this up at least to meet what it is right now. 2018, it's right now it's about 62, 65. And then we'll say 2019, we'll say that it's at an average of 75. And honestly, I think these are pretty conservative numbers to have 75 average in 2019. But we'll just keep it conservative. And then we'll say 2022, we'll say back to 100, which I think is definitely reasonable. It is kind of hard to, here I'll expand this, adjust this for some reason, and keep the other years the same. Okay, we'll take this back down. Okay, so let's just keep this as it is. So if this were to happen, the current share price estimate would be 70.24. If oil were to be 75 in 2019, and then back up to, actually in 2020 this is even back up to 100, which I wanted it So we'll just call that good. We'll say, you know, the recovery is going to take longer than expected, but at that estimate, the estimate would be 76.50. And obviously, this isn't like exactly what the share price would be. It's going to fluctuate just according to market sentiments and things like that. But yeah, you can also adjust. Say you think that they're going to produce more oil, you can adjust that as well. But those numbers are not as well easily predictable. But it's interesting to come in here and play with the numbers a little bit. And then we can also play with natural gas. The nat gas, I think it's around 250 per metric barrel ton. And we can go in here and adjust the numbers here. So yeah, you can see I already adjusted that. We can adjust that back down. And as you can see, this doesn't have as big of a change on the share price, just because that's only 16% of their business. I mean, another pretty cool thing about this is down here it shows who's buying, who their competitors are, where they're located at, and also where their reserves are. So this is just a really cool tool. We can go to a different oil company here. We can go to Chesapeake. This is a company that's really been beat up. It's trading around 296, and I don't think that this should be trading quite this low, because I didn't change any of the numbers. This is just what's already estimated in here, and it has an estimate of 521 for the share price. So I think this is definitely a very undervalued stock. But we can go in here and adjust the price of crude back up to about 100 in 2024. I think it'll get there before that. So we'll say 2018 average of 70, 2019 85, and then we can go in here and adjust nat gas as well a little bit up, just a little bit. And as you can see, if crude were to go back up to 2018 65, which is already at 65, if we're to be 85 in 2019, and then back up to about $100 a barrel in 2020, this is a $22 stock. So with these higher levered oil companies, this does have a little bit more debt. So that's why this has been beaten up so much. But yeah, there's definitely a lot of upside in these higher levered oil companies. And yeah, like I said, this isn't like an exact number. It's going to fluctuate a little bit. So yeah, some of these shale companies, they have a higher average cost to produce barrel of oil. So that's why it fluctuates so much between, if oil were at $60 and then if we're at 80 to 90. It doesn't seem like a lot, but their break even is pretty much right around 60 for most of these shale companies. So at these levels, most oil producers are just breaking even. And for you to see them really to appreciate in share price, oil would have to go back up to at least about $80 a barrel for them to really start to outperform. But as you can see, we can go down here and it has some interesting, facts and forecasts for Chesapeake. And like I said, you can go to, doesn't have to be oil and gas. We can go to Apple, and we can go to iPhone. You can adjust the iPhone pricing, the number that they do. So you can adjust that up and down. So say they're going to sell more, and say they increase their price. So yeah, this is just a pretty fun tool to kind of mess around with and see what impacts some of these numbers have on these companies and how that affects the share price. So yeah, that's it for this video, guys. I just wanted to show you guys that tool. I think that's a pretty cool thing to kind of go in there and adjust the numbers up and down and just see kind of what effect that has on the share price. So yeah, that's it for this video, guys. I hope you guys enjoyed, and I'll see you guys in the next one.